Now, with the topic of today being news, I felt it was appropriate for us to take a look at the live market at a time where there's lots of news happening. Today is the day that the Trump impeachment hearings are happening. The final votes are going to be coming out at some point within the hour that this session is being recorded. We also have the AUD employment change and unemployment rate coming out in about 12 minutes from right now. And so it's appropriate because of the topic of news. And I want to set the pace and help you understand what news is, why it's important, what news we pay attention to, and ultimately help you get aligned with the type of movements you could expect to see, as well as the different sorts of releases that we pay attention to when we're identifying our points of interest. On the calendar, if we take a look, there's tons and tons and tons of different news events. Some of them are red, some of them are orange. If we didn't have the filter on, there would be yellow folders as well. They're all different event types. After the news comes out, what we're going to be doing is discussing which news specifically to pay attention to. Which ones do you need to have on your radar and why? And so we're going to be going through a nice list. But since the employment change, unemployment rate comes out in about 10 minutes, we're going to shift gears and focus on the charts for the first part of this session. And then that way we can develop a better understanding of what things we may be wanting to keep our eyes on going into the news, what sort of reactions we might want to see. And so we're going to start with the major Forex pair, AUD, USD. There's news going on right now that's going to be affecting both of these currencies within the pair. Looking at this from the top down, if we were to observe where we're at on the daily time frame, immediately what catches my eye, we have a point of interest here. This bearish move that came below some fairly obvious equal lows, the engulfing candle that followed it, and then we see the exact same thing. We get the market retracing, bearish candlestick that sweeps a recent low, and then immediately on the following day it was engulfed. And so the market, up until recently, had been trending higher. We took out this point right here that was formed in November, and now there's a little bit of uncertainty, at least so it seems, on what the probabilities of what this market could be expected to do next are. And so I want to just point out a couple of things. First and foremost, we're going to highlight this candlestick right here. We're going to focus primarily on the open to the middle of that body. You can also see how just beyond that low is that whole level of 6,800. So just something to pay attention to. So 57 pips away from where we are right now. If we drop down to a 4-hour time frame, we can see that in this area where the market was accumulating in the past, we had a highly sensitive reaction in the form of a gap. To the untrained eye, it may be difficult to see that, but now you can easily identify it. And so what we're going to do, again, just to bring your awareness to it, can highlight it, extend it out into the future. We can notice how that gap is right below our lows. Okay, and if we were to really look at those closely, drop it down to an hourly chart, we can see that those are fairly equal lows. And so this is potential target for the future. And we'll go and we'll put a dollar sign there to represent that. Now, coming back to the 4-hour chart, there's one thing in particular that really stands out to me, and I feel like it could be where price is attracted to at this upcoming news release. If we look left to give us a better understanding of what's happened, we'll notice that at one point in time, when the market was coming off of this low, okay, after the last time we reacted off of our institutional area of interest, we had an imbalance that was formed. And so the imbalance, if you can't see it, go into replay mode. The imbalance at one point in time that was easy to identify was between the high on this candlestick and the wick right here when we had this retracement. And so as time passed, we get the market trading down, filling in the majority of that imbalance, and then going and making a higher high. And so what catches my eye is the way that this market traded down to where we are right now. Okay, thinking about the power of imbalance that's happened in the past, we have a very obvious one between this candlestick right here coming off of the high and this candlestick that shifted the market structure to make a lower low after this big sell-off happened. And so that imbalance between the wicks, just like that. And we can also notice that right in that area, there is that gap. Okay, and it's right near the 68,750 level. If we were to get this imbalance and narrow it down, okay, making it a little bit more precise, coming into the hourly time frame, we can see that we could adjust that like this. So using this wick, the candlestick that came down, and you may be looking at this and saying, well, that's an institutional candle. Well, this was the candlestick that invalidated it, right? Notice this was really what caused that market structure shift in the break to make a lower low. And so that's why we have our eyes there. Let's drop it down to a 15-minute. Let's see if we can get that even more precise. Notice how where our imbalance starts. It's still the same. It's right here on this candle. But what we can do, can narrow that down even more to where that wick is. Let's go to a 5-minute. Let's see if we can get it even more precise. The imbalance still exists. What about a 1-minute chart? Since we are still within the time frame that we're able to see that data. And so we can notice that the imbalance still exists even on this time frame. And so now, to bring everything together as we get ready for the news, we have overall, with what's been happening in the recent price action, what's looking to be a bullish scenario. We have higher structure. We have this candlestick right in here that recently gave us some signs of strength. We have our equal lows, the higher low, upside imbalance right around a highly sensitive price zone. And so with this news, what I'd be expecting falls right into a line with what we believe. The news is that excuse to move the price. And even if the long-term bias for AUD USD is down, generally what we're going to see happen first is the market will go higher to then give us that sign of weakness and sell off. Now, for all we know, the news could come out and we could just go immediately down and sweep these lows. And if you've done your markup, if you have a bias going into the news, The key is learning to trust yourself and trust your confirmations while using appropriate risk management too. Now, if I were looking to plan a trade around this, the optimal area to be positioning yourself would have been while these lows were forming, when we were getting a reaction off of this price point that was sensitive in the past. Not necessarily looking to hop into this right now. So instead, what I'll be looking for is that move higher towards our imbalance. And if and when we get that, okay, if the news is what causes us to move about 30 pips up into this area, that could be the confirmation to then start looking for that evidence and those signs of weakness for the sell to come down, take out our equal lows, and follow that whole mindset of if the market's going to go down, more often than not, we're going to see it go up first. If we take a real quick look at some of these other charts, GBP AUD, the overall structure is bearish. Okay, if we think about what we were just looking at on AU with the expectation of it going higher, higher time frames are showing us signs of AUD gaining strength going lower over here on GBP AUD, because if AUD gains strength, that's the selling that we see. Euro AUD also showing us that possibility of seeing the market come down. So let's switch it over. Let's see what happens with the news that's going to be coming out. So at the release, we get a nice spike up. Okay, we've come and we've hit that highly sensitive area from the past, the gap that we were able to identify. If we take a look at GBP AUD, it spiked down as we expected. And Euro AUD is following a line with the structure as well. It's fallen. So Euro AUD fallen about 30 pips up until this point. GBP AUD about 40 pips. And then AUD USD has gone up about 20 pips, and we're getting closer and closer to that imbalance. Now remember, if it's fast, a lot of the time it will not last. And notice we had these areas of interest, right, on AUD USD, as well as the expectation of what we wanted to see on some of these other currencies prior to actually going into the news event. Right, we had the expectation of where we believed price was going to be attracted to heading into the event. And so this is one of those instances you may hear people talking about. You're taking a buy to sell, right? And if you can find an effective way to position yourself in a buying opportunity up to the point of interest where you then want to sell, by all means, if that's your plan and if that's what you feel confident in, you can go and you can take action on it. If you'd rather only play one side, depending on what specific price point you plan out for your entry, a reaction like this with that quick spike up, very, very close to that imbalance that we were previously talking about. Right, we had the 1 minute imbalance that we were able to identify and get super precise on. And then also the imbalance right here. Okay, that gap, that 4-hour price action that we were previously talking about. You got to remember that these areas, anytime that there is a higher time frame gap, such as this, where we can see it very, very easily and very, very clearly, if the market structure is giving us evidence of potentially moving in that direction, these are the points that you want to have your eyes on and pay attention to, because they are magnetic. Under the hood of the markets, what's happening when the price is going up and down? You have buyers being matched with sellers. Anytime that a gap exists, there was an imbalance of orders. There was too many buyers or too many sellers and not enough liquidity. There was not enough money to support the orders that were coming into the market. And so that confirms to us there is large interest in those areas, which is why they're going to be magnetic and very, very sensitive whenever we see these quick reactions up and into it. You may notice by now that it's been 3 minutes since the news has come out. The bias was on point from a technical level, from what we were looking for, from what we wanted to see. But we haven't even looked at the numbers of the actual release. Right? We haven't even gone yet to look at what numbers came out for the AUD employment change and the unemployment rate. We're going to go ahead and we're going to take a look at that now. I would assume that because AUD USD went up, it was positive news for the AUD. It's more than likely that the employment change was equal to or better than what they expected, and that the unemployment rate was equal to or less than what they expected. And so we can see what was forecasted for the employment change, 14,500. What was forecasted for the unemployment rate, 5.3%. Let's refresh. We can see that the employment change came out at 39.9 thousand. So almost 2.5 times better than what was forecasted. And unemployment, we can see that it's down 0.1%. So both of these numbers were positive for the AUD, at least from what they say should happen. And then we see that happening over on the charts. So the charts gave us the clue prior to the news even coming out of what we needed to look for and what we could have expected. All that it took was a little bit of observation, a little bit of awareness, and knowing what it is that you want to look for. Identifying those obvious imbalances, identifying the higher time frame bias, and putting yourself in the mindset of, if the direction is showing us one thing, if it's super, super obvious, how many other people out there can see it? And then once you get in that mindset, it's properly positioning yourself. And so going into the news, even though it wasn't sent out as a bounce back trade idea, we had 20 pips on AUD USD in the direction, analyzed live, right up to the area where there is that possibility for a sell. Now, GBP AUD, the nice spike down, liquidity capture, 40 pips. Euro AUD, same thing. Just following the structure, reading the candlesticks, and making observations of what was the highest probability of seeing a specific movement happen. And so, as promised, I want to spend a little bit of time going over important news events that you want to be aware of. And so the awareness, it's the first step. If we didn't know that the news was coming out, we couldn't have prepared for it. We couldn't have found ourselves watching for the reaction, buying the market up to then sell it. And as we can see, the market is giving us that reaction that we were looking for, starting to give us those signs of weakness, selling off from the area we had our eyes on. But if we weren't aware that this was coming, we couldn't have prepared. We wouldn't have been able to even know until after the fact, and it could have resulted in missed opportunity. And so I'm going to draw it up on the screen, and we're going to talk about each specific news event that I pay attention to, the ones that I believe are important, and the ones that a lot of the time are that excuse that's used to move the price. And so the first one, it has many different names. The interest rate decisions. Okay, now interest rates are important because it shows us how a country values its currency. It shows us how much money you're going to get paid for having something like a savings account. It shows us indicators related to how well a country is doing. It gives us signs and it gives us clues of what smart money might do. If a country offers a high interest rate and they're going to be paying you a specific percentage to hold on to their currency and to keep their currency, remember, the people that are actually moving the market in Forex, they are buying millions of dollars worth of a specific currency. And if that currency has a high interest rate, they're going to be getting paid a swap fee to hold on to that currency until market conditions change and until it no longer benefits them to want to accumulate and have large amounts of that country's currency, and then they can go and they can switch it into another country's currency. So interest rates are very, very important. It can be called many different names. For the Australian dollar, for instance, they call it the official cash rate. For the British pound, they call it the official bank rate. For the US dollar, they call it the federal funds rate. For the Swiss franc, they call it the LIBOR rate. Okay, so interest rate decisions, they have a ton of different names, but you're able to identify them on the economic calendar if you use something like Forex Factory or investing.com by simply noticing the days that have some sort of monetary policy involved. Because interest rates go hand in hand with monetary policy. Anytime that we see an interest rate decision come out, more often than not, at the same time or shortly after, we're going to see a monetary policy statement or a monetary policy summary. And so this is essentially representatives that decide on what the interest rates are, coming together in front of the press and holding a conference where they answer questions and they basically share some of the reasons and some of the thought process behind why they decided to set the country's interest rates where they are. Okay, so interest rates go hand in hand with monetary policy. And so if you're unsure of if something is an interest rate decision, you can look for the monetary policy, or you can also expand the folder if it offers you additional information, and it will literally say interest rate at whichever bank lends currency to financial institutions overnight. Okay, so it's very easy to identify it, and these are one of the most important ones that I personally pay attention to. Before we continue to the next one, let's check on AU. We can still see those signs of weakness playing out. Nice buying opportunity right up to the area where we wanted to sell. You may be asking yourself, well, why didn't price come right into that pink box? Why didn't we come and fill in that imbalance completely before getting the signs of weakness and selling off? The time for us to see that would have been on the news candlestick. We came up to the 68800 level and we missed the imbalance by about 2 pips. This is one of those times where you need to make a decision if you were looking to, say, do a market execution and decide, are those 2 pips, waiting for the best possible entry, even worth it? And if you're using a limit order, such as a sell limit in this instance, again, you need to ask yourself, am I going to try and go for the best possible entry? Or am I going to factor in things such as the spread? Because what happens a lot of the time when these high impact news releases come out, like the interest rate decisions or the unemployment data that we were just analyzing live, your broker sometimes will widen the spread. And so if your broker typically offers a 1 pip spread on something like AUD USD, and so 1 pip spread would be, if the market is all the way up here and you want to buy it, it's going to give you your buy entry 1 pip beyond the highest point. And then if you go to sell it, same difference. Okay, because of that spread, the difference between the price you can buy and sell at. And so you need to factor that in because it may be a 1 pip spread 99% of the day. And then the news comes out and suddenly it's a 3 pip spread or a 5 pip spread or a 15 pip spread. Okay, it's going to vary, and that's why it's extremely important whenever you can to analyze these events and even just practice on your demo account so that you can at least make the observation and have the awareness of what sort of manipulation takes place on your broker at the time of these news events. Continuing down the list of important news that we need to pay attention to. We talked about interest rates and how they go hand in hand with monetary policy. The next thing that I have on my focus list, and anytime I'm going through the economic calendar, if I see these news events, I pay attention. FOMC, Bank of England meetings, the European Central Bank meetings, any meeting minutes. Because this is essentially very, very similar to what we were just talking about on interest rates, where they will do a summary or make a statement after the interest rates have been announced. Whenever the FOMC or the Bank of England or the European Central Bank gets together and they come out and they host a meeting, we can expect that during those times there may be additional volatility. And you're able to see it on the calendar. Okay, if we were to just scroll through, we can see right here on the JPY, monetary policy statement. That'd be something to keep your eyes on. Let's go a little bit more into the future. Let's find what we're talking about here with the, okay, so right here, ECB, monetary policy meeting accounts. This falls right in line with what we're currently talking about. Looking a little bit further, we can see right in here, Bank of Canada rate statement, overnight rate. So this is another example of the differences of what you may see the interest rate decision being called. Okay, BOC press conference. This is exactly what we're talking about right now. The Bank of Canada coming out, having a meeting, talking about monetary policy. And if you click the folder, it's going to give you a little bit more information about what exactly they're going to be talking about. Now, the next important news, employment change and unemployment rate. And so, as I mentioned at the beginning of this lesson, I thought it would be appropriate to do the lesson on news today because of, the structure that was presenting itself. So from a technical level, I could show you some things and we could literally, together live go through, look at the news happen, see some trades take place, and ultimately become more educated through the process as well. But the employment change and the unemployment rate, these are also news that I always like to focus on, and anytime that these are on the calendar for the week, you're going to hear me talk about. Okay, this isn't always going to be called employment change or unemployment rate. If we come back to the calendar and we just kind of scroll back up towards today, we can see the CAD, employment change, unemployment rate. We can see on the US dollar, unemployment rate, but instead of being called employment change for the US dollar when this news comes out, it's called the non-farm employment change. And so they look at every industry except for the agriculture industry. They do not consider farmers when this release comes out. And so sometimes in the community, you're going to hear people talking about NFP and how NFP is this really, really volatile time in the market that you need to pay attention to. Basically, it's an employment data, and they're giving us information about the employment in the United States whenever you hear people talking about NFP. Next on the list, for what I like to focus on and what I like to pay attention to, GDP. Okay, generally you're going to see something that says this, Q/Q. And basically what that means is that it is a quarterly release. So every 3 to 4 months, you're going to see a GDP release come out. And the gross domestic product, what it's basically looking at is the change in the inflation adjusted value of all goods and services produced by the economy. So all of the produce and all of the food and all of the services that are offered to the public, as more and more money gets printed, prices will generally go up. And so the GDP gives us a measure of that. Okay, and you're able to recognize it on the calendar such as this. Okay, GDP Q/Q, final GDP Q/Q. We have a monthly GDP release right here for the CAD. Okay, so these are also news that I like to pay attention to. Another one is the CPI, the Consumer Price Index. And this is essentially looking at the change in price of goods and services that are purchased by people like me and you. Okay, so just another example how you can identify it on the chart, CPI Y/Y. Okay, this is a monthly report. And if we were to scroll down, okay, we can see CHF, CPI, M/M. Here's another GDP, here's another CPI. Okay, so just like we do on the charts, when we're looking through the news from the fundamental side, we're training our eye. And you can actually go in and filter out specific event types if you really wanted to. You could take a look at growth, inflation, employment, central bank, and uncheck some of these other ones and really just tweak the filter to only be looking at news that you feel is important and news that you find contributes to the market manipulation that we look for. There's two more that we're going to be talking about today. One of them is retail sales data. So when we're looking on the chart, you're going to see something like this, retail sales M/M, retail sales M/M. And basically the retail sales data, it's taking a look at the retail sector, how many people are going out, spending money. If people are spending money, it's supposed to signify that the economy is doing well because people are not afraid to go out and spend. They're not saving. Okay, so that's something that I like to pay attention to because it generally produces some nice movements as well. And then the last thing that we're going to talk about is bank holidays. A lot of the time you're going to hear people talking about how when bank holidays are happening, you can expect that the market's going to be moving slowly. To a certain degree, that's true. If the institutions are closed, the probabilities of institutional traders moving money throughout the market are very, very low. But just because the institutions are closed does not mean the market stops. If it's a single bank holiday, such as when America celebrates July 4th, just because the American financial institutions are closed does not mean the banks are closed throughout the rest of the world. And so you need to think about that. Banks in Canada and banks in England, banks in Britain, they are participating in the foreign exchange markets. And so they're also going to be contributing to the daily volume and the price movement that happens on USD based currencies. It's not just the USD financial institutions that are moving and contributing those markets. Okay, so just keep that in mind. But when we see weeks like this, right, like this week, as I mentioned, this was the lesson for Thursday, December 26th. We have bank holidays all day, all week on pretty much every major currency because it's the holidays. Right? So during a time like this where we see consecutive days of pretty much every major currency in the world that's traded in Forex having a consecutive bank holiday. What we see happen at these times is the liquidity drops. There's not as much money moving around in the markets because the participation is very, very low. When the liquidity drops, what happens is sometimes we can see surges in volatility and we'll get movements like this, where the market has a very large and very extended move up to then come all the way back down to where it started. Or with what we saw on USDJPY, right? Same time, beginning of the year, the institutions had just cleared their books, starting 2019 fresh. Liquidity is low, order books are thin, volatility spikes, and we get in one swift movement a huge move that comes all the way back and corrects. This can happen at times of the year when there is low liquidity, thin order books, multiple bank holidays overlapped. This is something that we can see happen. And just to give you one more example, we can even see it on AUD/USD. And so now that you're aware of which news events are important, at least to me, and you've also had the opportunity to do a real quick, we literally spent the first 12 minutes before the news came out doing a real quick top down on AUD/USD, pointing things out, identifying imbalance, identifying our points of interest, and walking it down all the way to the smallest time frame, which you don't even need to do that. But just from taking a couple of minutes, you can see how easily we were able to identify not just an opportunity on AUD/USD, but opportunities on correlating currency pairs as well, like GBP/AUD and Euro/AUD. We didn't even need to do an analysis on these pairs aside from the initial base, looking at AUD/USD, establishing the direction that we wanted to see, and then confirming that it would make sense within the current market structure to see those movements that we expected to happen. And then once the news comes out, we can be calm, we can be cool and collected. And if you planned out a trade and you positioned yourself, it's always better to consider positioning prior to the news actually coming out. Because as we mentioned, with the spread and everything else that takes place when these quick spikes in the market happen, if you try to enter the moment that the news release comes out, you may think that you're buying it down here before the move starts, but your broker will probably fill you somewhere up here, and you're going to miss the majority of that movement. And so you need to consider that as well.